Hello everyone and a very warm welcome. Thanks for joining me, Phil Spencer, for my first Move IQ housing market update of the year. Now the frenzy of 2022's housing market certainly appears to have gone, and the concerns about the cost of living crisis are undoubtedly having an effect. But the current reality so far in 2023 appears to be better than expected. So, in order to bring you some industry expertise and insight, I'm delighted today to be joined by three industry experts, titans all three of them, to review the UK housing market. So, some brief introductions before we get cracking. Firstly, welcome back to Nathan Emerson, CEO of Property Mark, the professional body and regulator for estate and letting agents, and in fact all other agents across the country with over 18,000 members. Welcome also to Gareth Samples. Great to have you with us, Gareth. Thank you to you, CEO of the Property Franchise Group, UK's second largest multi-brand sales and letting agency with an incredible over 600 offices. Last but not least, Tim Bannister, Director of Property Science Innovation at Rightmove. Rightmove, well, we all know about Rightmove, the UK's largest online property portal. Tim, I'm going to come straight to you with a title like that. I've got to ask, what is your role? What do you do at Rightmove?
Well, yeah, my role is, we're one of the top 10 business websites in the country. Huge amount of data flowing through our site on a daily basis, monthly basis. Over 1 billion page views, 1.6 billion page views a month. So my role is to try and take that data and try and make sense of what it's telling us about the property market.
And you're good at it.
Well, try our best.
That's a big role, but I love the title and I love what you do. But actually, let's kick off a serious conversation. But because the Rightmove Boxing Day statistics are something that we all see. It's a little while ago now, but I understand there's been a lot of changes since that, but it was a big number, wasn't it, on Boxing Day? A lot of people looking at the site, a lot of people getting interested.
Yeah, every year we do focus in on that sort of how the year is really starting. It tends to kick off on Boxing Day. And this year probably was, there was probably more focus, eagle eyes on that period than perhaps ever before because of the year we've just had leading into this year. Yeah. We had a 55% uplift in demand, so inquirers and sending inquiries to estate agents trying to find their next home, versus the 2 weeks leading into Boxing Day. So that uplift, that jump of 55%, that was actually the highest we've seen since 2016. So I think it was some encouraging news at the beginning of this year.
So that gives us a sort of precursor to activity, to people wanting to move in the coming months, doesn't it?
That's right.
Have you actually seen that follow through? Has there been?
Yeah, so I think this is really critical. As we moved into 2023, based on the year that we just had, and particularly those final 3 months, so the final quarter of last year, we were really looking at that, and would that continue? So demand has picked up and continued to move forward. We're at sort of plus 11% the last couple of weeks versus 2019. And I think in general, we really are looking to compare with 2019 as a more normal year. We had been feeling like we were heading back towards 2019 throughout 2022. Yeah. And then it accelerated a bit from that front in October, November, December. So we're up 11% on where we were in 2019 at that same sort of 2 week period, and that's up a little bit from where we were at the beginning of this year. So I think the signs are reasonably encouraging in terms of where demand is heading. And then the next question, I suppose, is does that then lead into sales? And that's one of the key things that we've been looking at in terms of how demand turning into sales. Yeah. And again, I think there's some encouraging signs there at the start of this year. With that being actually compared to 2019, it's down 11%. But at the beginning of this year, it was down 15% versus 2019. And in those months after the mini budget, it was down more like 30%. So, we've seen the trend moving in a more encouraging direction at the start of this year, which I think may have surprised many based on how things felt at the end of last year.
Well, I was going to come to Nathan because last time we were talking, which was only October, And I was worried about a lot of the kind of doom mongering that was going on in the press. Did that have an effect? And how are things now? What are your property market agents saying out there?
I think certainly the press did focus people on the potential issues that were arising in the market, cost of living, interest rate rises. But I think pretty much as we spoke, really, the market already had momentum behind it. And I think that's certainly backed up by the figures here. And that momentum has carried on through. Now, we have seen probably a softening in the market in a slightly different way in the numbers of people that are viewing the properties in order to achieve a sale. So there's more viewings taking place per sale agreed at the moment. And that's a little bit of a softening of the market, which we would have expected to see. And we are now at a stage where people are starting to offer on properties, not necessarily paying the asking price, obviously. So there has been a change in the market. But overall, it does seem to be ticking along fairly well at this moment in time.
This is why it's fascinating getting you three particularly together, because it gives a sense, we can read the press, you can even read the industry stuff, some of it, but actually to hear it, you can predict it at Rightmove, and then your guys out on the ground are actually putting the deals together and seeing and feeling the activity and touching it and talking to people every day right across the country. So they do give you, and therefore us and my audience, a sense of actually what's happening, or actually what's likely to be about to happening. Gareth, a big thing for me is encouraging people to pay attention to local market data. And I'm not trying to knock the journalists and the press, but they've got a job to do to report on the national housing statistics, and you're trying to set interest rates. That's important. But you've got 600 businesses or something in the group. So again, you see a vast range. What are they saying? What are they feeling out there in the market?
I think I'd echo Tim's sort of analysis of the first 6 weeks. The mini budget was clearly concerning. They were predicting 7% interest rates. 7% mortgage rates, which would be off-putting from where we'd been over the last sort of 10 years. And that seems to have sort of rectified itself. There's some really good mortgage deals available at the moment. Demand since the start of the year is for us at a similar level to 2022. Sales are down. We sort of looked at the market and again echoing Tim's 2019 approach. We looked at 2019, 1.1 million transactions. We had Savills come out and say 875, which was a bit of a concern. We budgeted around 1,050,000, and we're probably 10% behind that figure in the first 6 weeks of the year. But it's a slow start and it will build. In terms of local sentiment, there are variations for sure. There are some markets performing stronger than others.
I'd love to hear more about that, the different regions, parts of the country.
Okay, so the north seems pretty active, pretty robust. The further south towards London you come, starting to slow a little bit, so they're probably back year on year, slightly higher rates. But again, the stock levels in the south are traditionally lower than they are in the north. So the choice aspect in the first 6 weeks of the year, probably more choice in the north than the south. So, this year more than ever, I think you're going to need to give it the first quarter before you start to make many assessments, because it was a slow start in the first week, 10 days of January. That's built week on week, started at 15% below 2019, now at 11 or 12%, and I think by the end of the quarter it will probably be something like 6 to 8% down on a 2019 number. So tracking about 1 million transactions, if you take 1.18% off that, maybe 1,020,000. So but still lots to play out. The buyer activity is surprisingly good, based on 2 years of high activity. The viewing levels are pretty good. People are taking longer to make a decision, which you'd expect. People have got to get used to paying, 4.5% mortgage rates, which is, something they haven't experienced for a long period of time. But, if we're all talking, it sounds like we are, that we're going into a normal market. Does it feel that way? Yes, it does at the moment. So is there anything to panic about? No. Is there some work to do? Absolutely. Will it be tougher this year than 2021, 2022? Absolutely.
Yes.
And you'll get back to those good estate agency practices, I guess, in terms of, operating as Nathan and I did back in the day when we were negs on desks in offices in the Midlands, it was hard work, you know. Yeah. So the good agents will rise to the top, and I think, you know, the 2023 will be a reasonable year.
It seems so long that we've been talking about, let's just get back to a normal market.
Yeah.
It hasn't been a normal market for
years.
Yeah. And probably if we get a normal market this year, and the signs are that we will, we'll all go, no, next year will be a normal market. Because that's the way of the market. It changes all the time, isn't it? That's what keeps us interested.
I think there's one other really key point, Phil, and you know, you look at the 21-22 market, and you know, there was, you know, 20 buyers for every property and multiple offers on every property. So the amount of abortive work estate agents did, because you can only earn from one person buys it, you get one fee.
Yeah.
The amounts of abortive work that took place was huge. So the offices are getting back used to that, and then redistributing where they put their effort, and that's an interesting one. So we're really focused on training, what good looks like, and almost taking them back to the normal market, and you know, educating some of the estate agents, because a number of the people will never have operated in a market that was 2019. So there's a fair bit of work to do.
That's a very neat way of saying, although it was quite straightforward to introduce somebody to a house in those sort of slightly odd times the last couple of years, and put a deal together for lots of money and earn your commission. Actually, what you're saying behind the scenes was there was a huge amount of work, because you'd upset a load of people on the way through because they didn't get the property.
Yeah. Absolutely.
That's absolutely fine. And I
almost
think
like the lettings market.
And I think equally, I think people's expectations of customer services and the levels of response that we all give has increased as well. So I think, you know, and I think that also factors in. There is a duty of care, and we all want to take better care of our clients and customers, and I think you know that does also play an important part in that.
Yeah, and 2021 would have been speed to sale would have been impressive to the seller, whereas now, if they're going to take a little bit longer, that customer service looking after that seller during the period between going onto the market and agreeing an offer is really important. The other bit I'd say, Phil, is and we may talk about lettings later. The lettings market is absolutely on fire.
That's a I'm banging that drum loud at the moment. We'll get to that, don't you? Right. Tim, can I come back to you for a moment?
Yeah.
So at Rightmove, and you guys have been reporting the rise in the number of people contacting estate agents. That's been really well documented, asking them to come round and value their home. But equally, of course, we're all very conscious of mortgage rates and what's happening there and in the wider economy. So if these guys get loads of houses to sell on their books, are there buyers out there genuinely and happy? Are they happy to borrow money?
I think the answer is yes. And you know, I think some of those demand figures that we mentioned, I think they really demonstrate that. And it's kind of I think it's understandable, the fact that we've started to see those demand numbers pick up.
Yeah.
And it's understandable that people took a step back in the final 3 months of last year, because I mean, it was an incredibly turbulent time. I don't think I've seen mortgages on the front pages of the papers pretty much any time in the last 10 years, and it was there every single day. And as Gareth mentioned, you know, mortgage prices were up sort of in the 6s and the 7s, and if you're doing an 85% LTV, it was at the very high ends of the 5s and into the 6s. Yeah, that right now is down at 4.8% on average, and you're going to actually, if you've got 60% LTV, so 40% putting down as a deposit, you might even be getting something in the 3s. There are a couple of the big lenders out there with 3% mortgage rates at the moment, 3.99. So you know,
it's better than we expected.
I think
better
that's
than
the
we
thing.
were led to believe.
And I think what people really wanted, I think it's been really clearly exemplified by the last sort of 5-6 months, is the importance of stability. Because when you're buying a home, it's not something you do on a whim. It's something you plan for a long period of time. You do your maths. It's not something that you just suddenly wake up one moment, generally speaking, and decide you're going to do, and then do it the next day. So when things are moving very quickly and your plans are getting impacted by, you know, mortgage is being removed from the market and rates changing very quickly, it's understandable that you might take a step back. But what we've seen is, with that stability, which I think we've had for the last couple of months now, that's starting to give people confidence. That's starting to mean people are inquiring. It's starting to mean people are going out and doing the viewings. You know, it's a bit more. It is going to be a bit of a slower market compared to what we've experienced. It's not going to be so many sealed bids, and it's not going to be loads and loads of people bidding.
And I think uncertainty is the killer of any market. It doesn't matter what you're trading in. Nobody likes uncertainty, particularly, as you say, Tim, when you're dealing with something that's so expensive and so important emotionally.
Yeah.
You know, your home is everything to you. Tim, can I ask, and I appreciate this, it might, you know, it's not your kind of the forte, but I'm sure you've got a good opinion on. At that moment when mortgage rates were high and they were looking, you know, there was a lot of doom mongering going on, wasn't there? It seems understandable to me that whilst there was uncertainty for the consumer, there was uncertainty for the lenders and the banks. They didn't know what would happen. They didn't know what to do or what was going to happen. So it's kind of understandable that they pull mortgages off, they put up the rates and cover themselves when they're in business.
Yeah, I think that's fair. I think, you know, speaking with lenders, you know, they want to lend. That's what they're there to do. That's their business, and so they want to be doing it. But it was obviously an incredibly difficult time. Anybody across the financial services markets, it was a really, really difficult time to make sense of where things were heading, and prices were moving. You know, swap rates were all became we all became experts in swap rates in the space of about a month. They ballooned out quite quickly, and then that's what tends to be what lenders look at when they're pricing their fixed rates. And you know, where were those going to end up, and when were they actually going to find a level that they weren't moving from? So it was really difficult for them as well. So I think everybody was finding it difficult, stressful. I think it's understandable at that period of time.
So we've moved on. We can put that back. We can park it. We were worried. We were really worried, weren't we? Because there was a lot of frightening stuff being written. But Nathan was the voice of reason. Always the voice of reason. I can scarcely even believe I said that. No, can I come, Nathan? You've got 18,000 members of Property Mark spread right across the country. Some big, some small. What are they seeing generally? And Gareth and I asked him. You know, we talked about regional differences, but on the whole, what are your guys seeing?
On the whole, I think people are seeing that transition into a softer market, but I think people are genuinely motivated, and they're confident that we will see through. I mean, we
Buyers
have
and sellers.
Buyers and sellers, and I think it all comes down to supply and demand ratios. And I think one thing which is regularly reported is the shortage of housing. And actually, when you have challenging conditions, a shortage actually continues the demand. And so actually the underlying trend is still there, the demand is still there. We still have liquidity in the market. So whilst we had challenges on interest rates, it wasn't a shortage of finance. It was just what you were paying for it, which if you remember the financial crash, there was no money to lend anybody.
Yes.
This is a little bit different. The money was there, but it's at what rate is proportionate to lend it out. And we just went through a repositioning on that front. So the demand was always going to be there. And I think we're seeing that happen. It's just going to become more challenging than we've had for the last 2 years. And we're not going to see a 20% increase in price that we've had over the last 2 years. The best would be great if we levelled ourselves out and broadly held where we are. I think that would give some stability.
A bit of consolidation. We'd all like just a bit of calmness.
We would indeed.
Gareth, would you agree with Nathan?
Yeah, I think, you know, you look back to that period, the sort of Liz Truss era, and the mortgage rates. And I can remember a buyer on the news, and he looked at a new home on the Saturday, priced his mortgage, and by the following Thursday, when he was getting ready to make an offer, the mortgage rate had gone from, or the mortgage payment had gone from like £1,100 to £1,800 in that 4 days. So in that volatile period, it's not surprising that people maybe just took a step back. I think the good news is that rectified itself quite quickly, and coming into this year, lenders were already indicating they had an appetite to lend. The rates weren't at 7%; they were at late 4s, coming down, and now they come back down to mid 4s. I think there's one other bit in the market for people dealing with the second-hand houses. Help to buy has also stopped. So the people that probably could have afforded in the last 10 years a 3-bedroom semi went and bought a 4-bedroom detached off a builder at 75%. That's now not available. So those people that can afford a 3-bedroom semi this year have to buy a 3-bed semi.
Yes.
So there is some weird calculation I haven't quite got my head around yet. All those people coming from a new build environment having to buy a second-hand house, I think will actually help estate agents this year.
And I think you've got a speeding up of transactions as well, because one of the biggest lags in the market had been the length of time it was taking to get from an offer to an exchange and completion.
Last year, yeah.
And we are now finding that those timescales are reducing and again getting back to a more normal, healthy level. And so again, that takes away more uncertainty of the sale falling through.
But I mean, fall throughs are a nightmare. Chains are a nightmare, and anything.
But I think you're dealing with emotions there as well, aren't you? You know, there are raw emotions for both the buyer and the seller. You know, people don't pull out of a property purchase lightly, just as they don't go into one lightly. And I think equally for people that are selling, you know, they pin their hopes on that transaction going through. And if for whatever reason it does fall through, the emotions are high.
I think the good news is, yes, they're falling through. Yeah, they're more falling through, but they're reselling quickly, and that's a positive.
True.
So you've got maybe a bit of an overspill of affordability with mortgage rates, and the people are finally deciding, no, I'm not going to do it. Mm-hmm. Coming back onto the market and selling remarkably quickly, and therefore you'll still get paid on that transaction.
Yeah, but we've got to speed up the transactions. The longer they take, the more people's lives change on the interim. It's the bane of everyone who works in the market. I'm sure. I have to believe. I have to have faith that we will speed up transactions. It will become simpler. It can't be that.
I hope you're right.
Yeah. Let's turn to the rental market if we can. We also have a kind of a sentiment of landlord bashing, and nobody likes the landlord, and I get that. And they're not asking for sympathy, but it feels that we have a real problem, because the private landlords, they're either losing money or they're not making money now because of the change of tax laws. I mean, I'm generalising, and there's a huge amount of legislation and red tape that they need to follow. But what worries me, and I'm sure it worries you guys, it does worry people in the industry. It doesn't seem to have filtered down to the high street yet, because there's still a lot of landlord bashing. But if all the landlords disappear, then what happens to the tenants? And what happens to the prices and the levels of rents? Tim, are you seeing activity on Rightmove that impacts either side, for the landlord or the tenant?
Yeah, I mean, the rental market has been moving incredibly quickly, and it's been doing that for quite some time now. We've seen demand. I mean, the demand story, I think, is there's been growing demand in the rental sector. Part of that is potentially it being a little bit harder to be a first-time buyer to get onto the sales side of things. We know that's a motivation for many people, but also part of it by choice, people wanting to be in the rental sector as well, obviously. But demand has been really strong, and we've had a couple of events recently as well. Obviously, that the pandemic, we saw demand actually reduce a little bit, or certainly go flat for a while, particularly when the attractiveness of cities, where many of these rental properties are, was removed when we were, we couldn't go out and socialise, we couldn't go to the office. So the reason to be in a town or a city renting was temporarily removed. That, however, came back really, really quickly as soon as as we opened up, as soon as some of those legal restrictions were removed. Demand really, really accelerated. People wanted to move. People wanted to find that new home. So we had all this demand, and that has just really, really continued. So you look at all our charts, demand has just been strong, grew massively through 2021 and it's 2022, and it's remained strong. But then if you look at supply side, it's the opposite story, and it's been like that for a while. Actually, supply has been falling consistently.
Where does this end?
Yeah,
it's not sustainable. What's happening now is not sustainable.
It isn't, because I mean, at the moment we're at sort of, it's compared to January 2019, demand per property is sort of 150% above what it was at that point. So that's like the competition amongst tenants for the available properties. It's tough. It must be, it's really stressful for the people who are looking for their next home, trying to find their rental home. I mean, there's been a little bit of an improvement over the last 4 or 5 months. There's been a little bit more stock coming on, and demand has sort of flattened a little bit, but not enough to make any kind of meaningful dent in that imbalance. And that's why we're seeing prices, double-digit price growth we've had for much of 2022, particularly in London more recently. And I think it will ease a little bit, but it's still going to be growing, I think, throughout 2023.
But when you say, Tim, there's a little bit more stock coming onto the market, do you think that's new landlords getting into the market, or where's it coming
Well, I think it's maybe just stuff potentially taking a little bit longer to let, so that's sort of helped some of the, but not significantly. So that's added a little bit to the available stock at any one time. When we've surveyed landlords, what we have seen is that some of those smaller landlords are looking to actually leave the market.
Yeah.
They are people who are considering, because of some of the uncertainty, because of the changes, things, tax regime has changed, EPC ratings is another thing that people are a bit unsure about. So those kind of factors weigh on the market, and we know that they've been looking to sell their properties, accidental landlords in particular. The larger landlords, potentially people who are doing it, for a living, or certainly a substantial part of their income. I suppose the good news is that actually a lot of them are looking to add to their portfolios at the moment. So despite some of the stresses and strains, and perhaps there's some positivity there around, we might see some stock coming on with those people picking up stock from the sales market. But we're not seeing it in significant levels at the moment. And there is a little bit also from obviously the build to rent sector.
Yes.
That is growing quickly,
Yes.
but it's such a low base. It's quite hard for it to make a significant impact on the imbalance that we're seeing at the moment. It's going to take years for that to
It feels to me that it's quite an exciting sector. Would you?
Certainly moving, there's no doubt
really
about
is.
that.
Yeah.
It's a daily challenge, isn't it?
But where do you guys see the private rented sector? If nothing changes, if from the current sort of mode of operation, where does it end? What happens?
Well, so there's a number of levers, isn't there? So at the moment, you're right. Landlords have been, battered by the government taxes and what have you, battered by shelter, about the quality of the accommodation. Most small private landlords offer very, very good quality accommodation. So, we look after about 150,000 properties on behalf of landlords. 76,000 of those would be fully managed, and the rest tenant find. We touched on landlords selling because of the tax regime, but also we're at the top of a market. So in any asset class, be it shares, be it property, whatever, you'd like to think you get out at the top of the market. So there's going to be an exodus. The question one is, do they get resold to buy-to-let landlords, or do they go back into? So you're not necessarily losing that property. You'll lose some of them, but not all of them. And then there's a huge piece for all of us to, attract tomorrow's buy-to-let landlords. As an asset class over the last 30 years, it's been incredibly good.
Yes.
And therefore it should be an attractive investment.
Yeah.
And our job is to position that with the next generation of buy-to-let landlords. But if I look at the market today, we're almost in the same as the sales market last year. 10 people want to rent every property. The demand is unbelievable. But the government have got to look at what's their strategy, because if their strategy is to be pro-tenant, anti-landlord, that becomes a problem. And we're not seeing a great massive exodus of landlords in the market. We're seeing a very strong market, but if that number of rental properties comes down, all that's going to do is put even more pressure on rents. So you get the solutions everybody wants are not going to be driven by the way we're operating at the moment. So things have got to change.
Things have got to change.
Yeah, in the medium term.
Well, Nathan spends a lot of time with government. Over to you. What are you doing about it? No, I mean, what is happening?
What is
tenant
happening?
Reform and things?
Absolutely.
Just give us an update.
So renters reform is a big part of what the government are looking to do, and equally, I think Labour have also indicated that they also want to follow that line. So Michael goes back in, and we're starting to now see things happening behind the scenes to start that process. And there are some key areas. People are genuinely wondering from a landlord's point of view. They have concerns and surety over, obviously we've heard Section 21, which is the notice that's often given to ask a tenant to leave a property, to be repealed. And effectively that then leaves what's called a Section 8 as the grounds to gain back possession, which at the moment doesn't do everything that it needs to do. And as a landlord, if you don't feel that under certain circumstances you can retrieve that property, and you've got tax liabilities, and you've lost capital gains, and you're now, as Gareth said, needing to create a good level of accommodation, you've got to spend money on a property, and you've probably got higher interest rates to pay on your mortgage, it doesn't start to become a great proposition, other than capital value increasing, but obviously capital gains has been removed, so that hits you there. But equally, interest rates, if they are in a positive amount from a savings account point of view, do you put your money into a buy-to-let property, or do you stick it in a bank account and earn yourself 4% quite comfortably? So we need a diverse mix of property in the private rental sector. And the one thing about institutional landlords or build-to-let is you're building a set type of product.
Yeah.
What it doesn't do is have the diverse mix that you need for people at the various stages of life. The average tenant's getting older. And these are things which one size doesn't fit all. And so you need that private investment in there. You need to give people the confidence to go in it. And you also need, from a tenant's point of view, the understanding that they are going to be able to have a good quality home, and they are going to have a choice. They're not all going to rent a 2-bedroom flat.
Yes.
So big challenges.
Yes.
And this is not one government. This is successive governments, and it is actually something that multiple parties need to get together. They need to thrash it out, and they need to fix a plan for the country that sees us through the next 10 years of delivery.
Yeah.
Chopping and changing between different administrations will never achieve what we need.
You're music to my ears. But is that actually realistic? Could that happen? Could they all get around the table and agree for a 10-year plan or a 20-year? It's taken them 25 years to get in the position we're in now.
But the plan was always, as the last plan was 300,000 new units a year, and they get to 150. So I mean, every plan has failed. So we know we need more houses built in this country to satisfy demand, and we've never got to the number we need. So therefore, we're 20 years behind. Every year, missing that target by 100,000 houses. That's 2 million additional houses. Until we can work out how we provide the right number of new homes, no.
We could still carry on chatting about house prices and property for the next 25 years, couldn't we? Maybe we'll have to. Tim, have you got any thoughts on private rented sector?
Well, I think I agree with what's being said so far. But for me, and I think it relates back to, I suppose we've seen it on a micro level with this idea around the benefit of stability we've seen in the sales market in the last couple of months. I think what you need, generally speaking, is you need clarity and you need stability, because those are the things that an investor needs when they're thinking about where to put their capital. Because once you've got that framework and you're clear about where it's going to be heading, you can plan. You can build your business plan. You can plan what you're going to do. You can make a decision about where you put your capital. But if you don't have that clarity, you can assume the worst, and you potentially, you step back a little bit. So for me, it's actually, I'll leave it to these guys around, what those specifics might be for landlords and those kind of frameworks. But the critical thing from what I see is that you need clarity and stability, because that's what enables investment to flow, and that's what will mean we have more properties for those renters to rent, which is what we really need.
So we can have an active market, but a stable market. We can have a market that's consolidating after a few kind of crazy years, but you need it to be, you need people to understand what's going on and what they can expect. Yeah. Crystal ball time, I'm afraid, gentlemen. Just 30 seconds each. What does the next 6 months look like? Nathan, I'm going to come to you first.
I thought you might. I think we will continue to see a slight consolidation, really, and I would welcome that, because I'd rather have something controllable than non-controllable. I do think we'll start to return to a normal market, and we're already seeing in different areas differing levels. So we've got some areas at the minute still massively busy. We've got other areas which have gone very, very quiet. And so that rebalancing is taking place. And I think with the current momentum that's going through the pipelines, we're probably going to see that flow through over the next 6 months. I'm not worried. I'm not concerned. I'm actually broadly welcoming the the right level we need to be, where we need to be.
Gareth, over to you.
I'd agree with Nathan. I'm pretty optimistic. You know, the start to this year was really important, and I think, you know, the figures that we're seeing, albeit only 6 weeks worth of data, are really encouraging. I'd expect to see that build more like a normal market, which was, you know, Easter was when it peaks through till, you know, August, September, then quietens in the fourth quarter. So the next 6 months should be a good time. You know, we should be seeing good levels of instructions, good levels of sales agreed, the lettings market continuing to be very buoyant, and agents, you know, readjusting to the new normal.
Tim, you're the data man, and of course, I mean, would you concur? Because I'm really conscious that you, of all of us, you see it before it happens. These guys see it on the ground, absolutely, right across the country, all price brackets, all areas. But you see the data on the site before it actually happens. Would you agree with them?
Yep. Yeah. So I suppose what we're seeing is, undoubtedly, it has been a tough time. It's been concerning for people out there for what they experienced in October, November, December, and that was reflected in the data, and it's totally understandable. I think what we're seeing, and we've had chats with agents out there, it's been an encouraging start. I think we're heading back towards the 2019 kind of levels. Okay. Demand's coming back. Yeah. Sales are occurring, so we don't have stalemate. Sales are occurring. Yes. Encouragingly as well, actually, first-time buyers. So first-time buyer segment, the smaller properties, are holding up pretty well. In fact, they're holding up the best from our numbers, surprisingly.
That is surprising.
And I think that's really encouraging as well, because they're the powerhouse of the sort of the market. So if that's holding up, that's quite positive. Yeah. It is early days. You know, we're only 21 days into we're in February. So it's early days. Spring selling season is going to be critical. Yeah. And that will be a bellwether for how things are going to go. But encouraging signs at the moment, perhaps a little better than many people thought they'd be. Great. We think prices by the end of the year will be about 2% below where they were at the end of last year. Okay. So effectively sort of flat to slightly down in the sales market. And as Gareth says, the rental market is still very strong. The imbalance between supply and demand is still there. So we think we'll be sort of 5, 6, 7% up in terms of prices in the rental market.
Gentlemen, an excellent session. Let's leave it at that. Really, really useful. Really great to have you and your expertise for our audience, because we've covered a lot of topics. I am worried about the rental sector and what's happening to landlords, and therefore what will happen to tenants unless the needle is swung the other way. That's a big one for me. So grateful for your time and efforts. Very nice to see you. Can we do it again sometime?
Absolutely.
Yeah, definitely.
Absolutely. Thank you so much.
Thank you.
Cheers.
Thanks.